How are we getting on, people? Luke here from LAGFX. We are back today with a new Sunday Sessions video. If you are new to this channel or this series, this is a series at which we do every Sunday. We take a few pairs that we feel hold good potential for the coming week. We break down our analysis and we dictate the direction of the markets depending on what we have found throughout our analysis. Now, this is obviously great for those who are looking to learn how to trade, but it's also good for those who are wanting to take part in the markets in the coming week and potentially profit from the analysis we have performed. Now, if you do go on to enjoy this video or profit from any of the trades that we are looking at placing, be sure to like this video and share with your friends. And if you have any questions or queries with regards to the analysis we go through today, please leave them in the comments below and we'll get back to you as soon as possible. Now, there's a few pairs that we're going to go over today. I'm going to start off with the Australian dollar to the US dollar, and then we're going to head over a few other pairs, 3 or 4 pairs today, nothing too crazy. But yeah, the main aim for this video is to give you guys my bias and the direction that I believe the markets are going to trade in, and just highlight some zones and areas that I feel will be beneficial for you guys watching. So you can see here we are looking at the Australian to the US dollar market. This is on the 15-minute time frames. We can see evidently price has been trading us in a bearish way, delivering us with clear lower highs and lower lows. These are the laws that bearish structure follow. We therefore want to be looking for short opportunities. To back this bias to trade the market short, we have had the penetration of a higher time frame supply zone. This has introduced supply into the market and has ultimately flipped the S&D balance. You can see here this would be considered the last protected low in what is or was bullish structure, trading us into this point, and we have seen that price has traded beneath this. Some of those will look at what I consider a break of structure as a liquidity grab for a continuation to the upside. This could be that. What we are backing this analysis on is a penetration of an area of interest that I've got marked out here, and for us to see a break of structure to the downside happen once again, but fractally. This would give us the confirmation that this is more than just a liquidity grab, and hopefully a continuation to the downside. Now, to further back my bias to go short in this market, we have been delivered with an extreme higher time frame break of structure to the downside, as well as a higher time frame penetration of a supply zone. So we are seeing that price is respecting these areas of supply on the extreme higher time frames. We therefore believe that the S&D balance is obviously in favor of supply overall, so we want to be looking for those short opportunities. This zone here is something, an area at which I will be looking to go short in this market from. It's just important that we wait for the right confluence in order to actually place the position itself. That will come, as I say, from a break of structure in and around this area. So we want to see the last protected low within the bullishness that trades into this zone to break in order to confirm the end of that correction and the start of the next bearish leg to the downside. Now, if this zone is absorbed, that would tell us that the S&D balance is still in favor of demand whilst it's correcting, and we may see price trade up and into this zone here. So what I'm going to ask you guys to do is pause the video now, mark this out on the 1 hour time frames, and also mark this area out here. The increments for the areas itself are in the boxes. Mark them out and apply them to your own charts. Okay, now moving over to the Euro US dollar market. This is another pair I want to go short in. However, I understand that price is within a corrective phase and we need to find a realistic area that price can go short from. So similarly to the first pair we went over, the US dollar is the quote currency. So we want to realistically be trading both pairs in the same direction, as that just helps build that confluence. So the fact that our analysis coincides with one another is very beneficial to our bias to go short in this market. As you can see, I want to see price trade up and into this area before going short. If it absorbs this fractal zone, then short from here, and the same applies to this one. We want to see price trade up, so an initial initial bullishness to the upside before that move to the downside. And again, the reasoning for this is because we've had a higher time frame break of structure after the penetration of a higher time frame supply zone. We've been delivered with bearish structure already. We are simply seeing price correct itself. Now, if you watched last week's Sunday sessions video, I did have this area highlighted out for everyone. And price has traded perfectly into this and started to trade us higher. So it's lovely to see that the zones that we are marking out are being respected and that our analysis is playing out as we predict. So I simply want to see price trade up and into this area here. I've marked out an order block here on the lower time frames. There is also a higher time frame order block, and this is considered a fair value gap on the 4 and day time frames. So we have loads of confluence to suggest that price should trade into this zone before taking the markets lower, assuming enough supply is introduced to give us that S&D flip. But this is somewhere I will definitely be looking to go short from, as long as we are given that confluence and confirmation to suggest the next bear run. So again, mark this area out for yourself, set alerts just underneath, so you know that once price approaches these areas in price, you can then adjust and wait patiently to take part in the market. But yeah, this is definitely showing good signs of a bearish run. We just need to wait for the confirmation in order to get involved. Okay, moving over to gold. This is a market I was taking part in the end of this week. I was trying to take part in the shorts because I understand that it's just a matter of time until price runs out of demand and we see a correction. I thought we were getting that last week. My analysis wasn't completely correct. However, I do believe that this bull run will come to an end soon and we should see price correct itself. Reason being, we're not leaving much room for price to really correct itself down and into before a continuation higher. There's a hidden order block here, but other than that, we are looking at breaking these lows that have been set to trade into this one. So yes, there's this area which you can mark out for yourself. The area in price is on the right hand side here. It is on the 1 hour time frames. We're looking at the wick to the upside followed by the wick to the downside. This suggests a hidden order block, so sells within a heavy bull run. This is institutional control and somewhere that price may come down to correct itself before the next run up. So what we can do, set an alert here, wait for price to trade down and look to go long, assuming price gives us the confluence to do that. If, however, we see price absorb this area, continue trading us lower, this would be our next course of action and our next area to potentially go long from. But yes, I feel as though price is going to give us a run to the downside. It's just a matter of time. However, XAU has been extremely strong. The gold has been extremely strong, just with it being a precious metal. We understand that the value in gold is always going to increase. And when we have signs of weakness in currencies, the strength of metals are only going to increase. But that's my analysis for XAU USD. I understand this is a bullish market. I want to be looking to get involved in bull runs longer term. However, I am expecting some kind of correction within this market, so there could be the opportunity to go short as well. Okay, the final market I'm going to touch base on is the Great British Pound to the US dollar. And quite simply, we should be looking to go long in this pair. I want to see price continue trading as higher ultimately. I've drawn a path out here where we can see prices traded into this area of interest. This was actually a fair value gap. Price has come to clear this, traded into this order block down here, and now we are seeing price trade us higher. We've been delivered with a break of structure to the upside. So that suggests that we are no longer following the laws of bearish structure, trading us lower, but we are now following the laws of bullishness, trading us higher. Therefore, we should be looking for those long opportunities. I'm simply waiting. I'm just going to move this up here, if you will. I'm simply waiting for price to come down to correct itself. We have a hidden order block here, and we could say that there is also one down here. So be interesting to see what price comes to trade down into and respect. But one of two, I believe price will trade down, set a higher low before taking us higher. So if we have a more detailed path, I want to see price trade down, set that higher low before taking us higher in the market. That would be following the laws of bullish structure. But yeah, that's actually going to conclude my segment of this Sunday Sessions video. I hope you guys have enjoyed. I hope you guys have learned a thing or two. We've spoken briefly on fair value gaps. We've spoken briefly on order blocks and hidden order blocks, structural laws in the market, a little bit about fundamentals and the importance of having multiple pieces of confluence. We've spoken about quote and base currencies. So there's lots of topics there that I've covered. Yes, not in great detail, but this is the whole point of this Sunday Sessions video. I'm here to give you zones and areas to work with. And if there is any questions with regards to my analysis, it gives you the opportunity to leave those questions in the comments. I can make videos based on them, or I can answer those questions in the comments. So yeah, if there is any questions with regards to my analysis, whether you agree, disagree, you want to see me explain something in greater detail, please leave them in the comments below. We are here to support you guys within your Forex journey and ultimately push you to success, the place you want to be, that financial freedom that we are all seeking. I just want to say a massive thank you for watching. If you have enjoyed, don't forget to leave the video a thumbs up, and we will catch you all in the next Sunday Sessions video.